What's going on? Welcome back to the channel. So today I want to talk to you about the Home Depot. Just came out with the earnings. I want to go over some of the key highlights that you need to take away from all of it, what analysts are saying, and everything else you need to know. But first, make sure to hit that thumbs up. And with that, let's get right to it. So today it is up 2.87%, currently at 393. So definitely doing fairly well. A lot of volatility, and I think in general, like I said, it's kind of doing fairly well given the market circumstances. They did beat both on earnings per share as well as revenue. Near the end of the video, I'll go over some of the future guidance that they did give, and again, some of the key highlights. Basically, going into the earnings, you had somewhat the market really negative. So the 2 weeks, 1 week, 3 day, and 1 day, all negative leading into the earnings. Implied move was 3.85%. So today is rather timid in comparison to what was anticipated. But regardless, even if we look back historically, there's a good 65-70% likelihood that it was going to beat. But of the call options that are being done so far today, you see consensus for it to be roughly around that 410 range. Bears are anticipating for it to be sub, for the most part, it looks like 375. So they are still anticipating more of a pullback. Again, that could be stemming from just the macro conditions right now. But looking at shorts, 1.02% of the free float is being shorted, works out to be 10.15 million shares. Just for clarity, Home Depot is not a squeeze play whatsoever, but you have right here shorts returning leading into their earnings, insinuating that they did feel that it was going to be a beat. So I think the writing was on the wall for the most part for that. You see some signs of manipulation though. So cost to borrow minimum is negative 0.07. So meaning that there is actually some brokers out there physically paying people to short Home Depot, as messed up as that is. But once again, just for clarity, it's not a squeeze play. With it at 393 and change, it is trading between this pivot and this S1. So 388 will be a strong support that you really want to watch for that to hold. And then flip side, 406 followed by 423 will be the following kind of target / resistance points. So far, only 2 ratings have come out. Most likely in the next couple of trading days, you will see more and more trickle in. But you did see one 455 and then 467. So no all-time high ones yet. And that was done by Jeffries, Jonathan, who has a 51% success rating, and then Joe, 57%. As a consensus, $451 is that price target, representing a 14.52% upside from these prices. So let me know your general thoughts on Home Depot. Did you buy? Did you sell? What was your general takeaway from their earnings? But with all that said, I'll go over the future guidance and some of the key things that you need to be aware of for coming from an investor standpoint, of course. And so with that, let's get right to it.
Home Depot outlines 2.8% sales growth and 1% comp growth for 2025 amid SRS expansion. Earnings call insights. Home Depot 𝗖𝗢𝗡𝗡𝗘 2024 management view. Ted Decker, CEO, reported fiscal 2024 sales of $159.5 billion, reflecting a 4.5% increase. U.S. comp sales declined 1.8% for the year, but Q4 saw a 0.8% comp sales increase, with U.S. store comps rising 1.3%. Adjusted diluted EPS for the quarter was $3.13, compared to $2.86 last year. Decker highlighted the acquisition of SRS, which contributed $6.4 billion in sales for the 7 months under ownership. SRS opened over 20 new locations and completed 4 tuck-in acquisitions. The company expects mid-single-digit organic growth for SRS in fiscal 2025. Anne-Marie Campbell, Senior EVP, emphasized progress in the Pro ecosystem, with investments driving $1 billion in annualized incremental sales across 17 key markets. Enhancements in delivery, inventory, and customer service tools were noted as key drivers. Billy Bastek, EVP of Merchandising, observed strong Q4 performance in categories like appliances, lumber, and building materials. Online sales grew 9%, supported by advancements in delivery speeds and AI-driven customer tools. CFO Richard McPhail noted total Q4 sales of $39.7 billion, including $2.5 billion from a 53rd week. Gross margin was 32.8% in Q4, down 25 basis points year over year due to mix changes from the SRS acquisition. The company announced a quarterly dividend increase of 2.2% to $2.30 per share. Outlook. The company projected fiscal 2025 total sales growth of 2.8%, and comparable sales growth of 1%. Adjusted diluted EPS is expected to decline approximately 2% compared to fiscal 2024, primarily due to a 53-week comparison. Gross margin is expected to remain flat at approximately 33.4%, while operating margin is forecasted at 13%, with an adjusted operating margin of 13.4%. McPhail stated, "Our fiscal 2025 guidance reflects SRS contributions, new store openings, and expected mid-single-digit organic growth for SRS." Financial results. Q4 adjusted diluted EPS was 3.3. Total sales reached 39.7 billion, with a 14% year-over-year increase driven by the 53rd week and hurricane-related sales. Operating margin for Q4 was 11.3%, down from 11.9% a year ago, impacted by SRS-related mix changes. Inventory levels rose to $23.5 billion, with inventory turns improving to 4.7x from 4.3x last year. For fiscal 2024, the company opened 12 new stores and achieved total sales per square foot of approximately $600. Return on invested capital was 31.3%, down from 36.7% in 2023. Simeon Gutman, Morgan Stanley, asked about macro housing trends and comp forecasts. Ted Decker responded that while housing turnover remains at a 40-year low, the high equity levels in U.S. housing could eventually drive larger remodeling projects, though meaningful changes are not expected in 2025. Christopher Horvers, J.P. Morgan, questioned category performance. Billy Bastek highlighted positive trends in appliances, building materials, and pro-heavy categories like gypsum and decking, despite ongoing pressure on financing-dependent projects. Karen Short, Melius Research, inquired about operating margin guidance. Richard McPhail clarified that the year-over-year 40 basis point decline includes 15 basis points from SRS mix impacts and 20 basis points from natural deleverage due to lower comp sales. Steven Zaccone, Citi, asked about SRS's impact on the bottom line. McPhail confirmed SRS added $6.4 billion in sales for fiscal 2024 and contributed approximately 40 basis points of mix impact to overall margins. Sentiment analysis. Analysts raised concerns about macroeconomic uncertainties, higher interest rates, and their effect on larger remodeling projects. Questions about housing trends and SRS contributions were pressing. Management remained cautiously optimistic, emphasizing ongoing investments and growth in the pro ecosystem. While confident in operational improvements, they acknowledged challenges in the rate environment and deferred projects. Compared to Q3, the tone remained consistent, with a focus on strategic initiatives to drive long-term growth. Quarter-over-quarter comparison. Q4 saw a return to positive comp sales growth at 0.8%, compared to a 1.3% decline in Q3. Adjusted diluted EPS increased to $3.13 from $3.78 in Q3, driven by the 53rd week and improved customer engagement. Management's tone in Q4 was more focused on the pro ecosystem and SRS integration, while Q3 emphasized hurricane-related sales and seasonal performance. Analysts continued to focus on larger remodeling project deferrals and macro uncertainties in both quarters. Risks and concerns. Higher interest rates continue to pressure financing-dependent projects, such as kitchen and bath remodels. Management noted that larger projects often require HELOCs or cash-out refinancing, both of which remain subdued. Macro uncertainties, including housing turnover and political dynamics, could delay a recovery in larger remodeling demand. Analyst concerns included potential impacts from tariffs and inflation on consumer spending. Final takeaway. Home Depot delivered a solid Q4 performance, with comp sales turning positive for the first time in 2 years. The company remains focused on pro ecosystem enhancements and integration of SRS, which is expected to drive mid-single-digit growth in 2025. While macroeconomic uncertainties and higher interest rates continue to pressure larger projects, management expressed confidence in its strategic initiatives and investments to sustain growth.